Hey traders, how we doing? So today what I want to go over is last Friday the 29th, I think it was, this short trade. As you can see here, I want to go over it, dissect it from the very beginning, show you why I got in, why I didn't hit my TP but it's still okay, and how I went about it and everything in between. So let's dig in from the very beginning. So let's go back up to a higher time frame. Let's go to the 5 minute and show you the exact trade, because I do believe actually trader 1 might have called a very similar trade as well. So this was the trade I wanted to get in. Now before I even thought of this short, where I like to mark up my chart, something that anyone that's learning to trade will do. Maybe it's the day before, maybe it's first thing in the morning. You can mark up areas, mark up zones, and just have a little bit of little AOIs, POIs of where it might go and where it might react. So then if it does come to this area, start slowing down, start showing some confirmation. It just gives you that little bit more confirmation anyway. So the reason why I already had an area marked out here, because I believe it was on the daily. Yeah, it was on the daily. So on the daily here, I had this marked out. I had this imbalance there already marked out. So I had that there. That little black line in the middle there is 50% of that imbalance. So I had that marked out on the daily already. So this would have already just been floating in the middle of nowhere. And then what I done when I had that marked out, I got the fib on it when it was coming. When I had that marked out, I just thought, oh, I wonder where that is with the Fibonacci tool. Don't know if anyone's used this yet. It's a very good tool. Won't dig too much into it because it's not complex or nothing, but it's just another whole call. Maybe I'll do a call on that. And I noticed around this area here was just in between. Let me move this over a little bit here. That area was exactly in between the 618 and 786. So I did think, okay, that solidifies the area a little bit. It means it's going to fill the imbalance to the 50% because that's what you'd prefer. It's good on the Fibonacci and it's good on hitting targets from the higher time frame. So already, before we've even got to that, before it's even played out, that's a little area that I'm keeping an eye on. So that was that already. So as the day goes on, what we'll do, we'll jump down to the 5 minute, because that is where I like to mark out on the 5 minute. Soon as I got on the charts about 7 o'clock, I started marking out my areas. Started marking out where liquidity is, what it might do. So straight away, I'm down here. That's a good break of structure. People are going to be getting in. There's going to be liquidity below here, like so. There's going to be on that break of structure there, which that should take us around to about 7 o'clock there. Excuse me. We've got liquidity there, and straight away we start building a story. We start building a story as the day goes on. So as this was playing out, when this broke this high here and broke just above Asia, it started getting interesting, because I was interested in this zone here. I was very much interested in this 5. I think I had it on the 15. No, it was the 5. Yeah, it was the 5 minute there. That is what I was interested in. And the reason why I started being interested in this as the day went on, because you can see here, more liquidity built up, like so. More liquidity built up, more new. It's just building entries, and it's building. A lot of people put in. Let's get rid of them. Get rid of you. And as you can see, liquidity is building up over here. There's imbalance under here, as you can see. Let me zoom in a little bit more. So we've broke structure. We've got a lovely order block here. We've got imbalance, and we've got liquidity building up. So for me, I wanted this here to come down. This is exactly what I wanted, to come down into this area here, and off we go. That is what I was looking for, because we also had this VWAP here. This is a good indication. It's not a guarantee. As you can see, it goes past it, but this VWAP line, it holds quite well. As you can see here, look, bounce straight off of it. So you can just use it as a little bit of a confirmation. So where that was in my 5 minute, I've written 15 there, ain't I? Where that was in my 5 minute POI, that just makes it, again, just more confirmation, because that's what it's about. That's what trading's about. We don't know what the charts are going to do. No one knows. I know everyone wants to hear liquidity's there, it's going to take it, it's going to go, but we don't actually know. All we can do is build up a bias, build up confirmations why it might go in that direction. And if you've got a lot of indications that it's going to go in that direction, more than it's going to go the other direction, that's when we take a risk, because effectively trading is a risk. Every trade you get into, it is a risk. We don't know exactly what's going to happen. I mean, like you've seen in our community, like you've seen with a lot of trade breakdowns that I've done, a lot of traders, what they're doing, we have a very good edge. We do have a very good calculated edge, and that's why our risk management is on point as well, because if it ain't right, it's fine. We take a losing trade, we go again. So that's what it's all about. It's just about building them up, building them up. So that's what I wanted. That's what I really wanted. Let's get rid of that. But as you can see, it left without it, and I was a bit like, I was a bit gutted, because as you can see, it come right down here, and I thought, right, brilliant. I'm looking. That's where I was going to get in. Cool. How big's that stop loss? That was my trade there. Minimum to go to there. So it'd have been a nice 3-to-1, and it stopped there. I was a little bit gutted because I waited around all day for that. I waited around till, I say all day. It felt like all day. Anyway, that didn't happen. So we move on. It didn't happen. Then it starts going up into the area I've already marked out. So now I'm thinking there is still, where it's made another break here. There's going to be more liquidity under here. But not only that, where there's liquidity from people from breakout structure, then there's people just getting in these zones here. People getting in these zones here. So there's more entry. So there's a lot of liquidity built up here. So as it's coming up here, I'm still happy that this is going to be a nice zone to react from. It might not now because it's gone right up, it's took more liquidity. It might not. But at this moment in time, I'm still very happy for it to come down and go back up. But meanwhile, it's come right up here into this area that I've already confirmed. I already know. I've not got to go do my analysis because I've already done it on the daily, the 4 hour, the 1 hour. I've already done it. I know that this is a good area. So when it come up here, again, thought it might come down. And when it come up here, I thought, okay, right, this is just building up so much liquidity. I'm looking, even though it's against my bias, I'm looking to take a short, because at one point it's going to come down and it's going to take all of this liquidity here. So I'm happy if the candles react how I want them to react. I'm happy to take a short. Now, at one point I was looking at this on the 15 minute, because as many of you will know, if you've watched my trade breakdowns, I prefer a 5 minute break, which it didn't have. So normally I just won't take the trade. I just will not take the trade. But because of all of these other confirmations, like I've said, all the reasons why it could definitely come down, I looked on the 15 minute. Now, again, was it a little, for how I trade and how my entry is, was it a little bit of more of a risk? Yeah, it was. But I was happy to take that risk because of everything I've just spoke about. What it done on here, oh, I've just done that. On here, this candle to this candle, like that. Now, this isn't something I go off every time, but like I said, everything I just spoke about, on there, it just, was it this one or the other broker I was looking, thingy I was looking at, it just closed below. And for me, I thought, okay, that candle's closed below. It doesn't look like it has on this one, to be honest, or it might have just. It was very small. Yeah, look, it has just. And I was thinking, right, okay, so that's closed below. Let's get rid of that. It's closed below, which makes it a relevant break of structure, which then gives me a nice zone here for it to tap into. like that. Let's go on down on the 5 minute, and that gives it a nice zone for it to tap into. Just got to quick take a sip. Oh blimey, mouth's drying up. So when it did come back to that, that was enough for me, because we had, I believe we also had, in fact, divergence here on the 5 minute. And a lot of people know, again, if you're watching any of my breakdowns, it's another one of my confirmations that I like. If there's divergence in RSI down here, it just means basically that even though price is going up, this is like the volume's slowing down. So again, it's another little tool to your toolbox, meaning it could slow down and it could start dropping, to which it did. So it dropped down. Now I know there's liquidity here and all of this below here. So for me, this is a dead cert within reason, you know what I mean, for it to come down and swipe this liquidity, then take the buy back up. So I'm thinking, right, here we go. This is going to be beautiful. We're going to take it down. We're going to take it back up. That's what I'm waiting for. So it come up, it tapped into my area, and it started reacting lovely. It actually, I think, if I remember correctly, I had this like that, because it tapped into my area, reacted nice, and then started going into drawdown, which I thought that's fine. It's just like how Trader Free trades. I trade very similar to Trader Free. Goes into drawdown, that's fine. These things happen. It's got all of this area here. This is why our stop loss is all the way up here. If you want it to be safe, even more safe, let's undo that. You can have it above there, and you've got all of this area for it to breathe. You've got to let your trades breathe. So if it was coming into here and you wanted to layer in how to do with Trader Free, or how you might just enjoy doing it yourself, that's perfect. Layer in one more, because we've got our bias, we've got our confirmations, we know the reason why we're entering the trade, we know where we're going to exit the trade. Now, this brings me on to the next bit. It comes down, starts reacting absolutely lovely. Now, this is where you've got to really look at your charts and start, like we have in the community, we have TP1s, TP2s, TP3s. 9 times out of 10, them TPs are put in strategic places in case there is a reaction. And for me, here was the perfect place it could react from. That it could have reacted from. Now, don't get me wrong, I wanted it, and I did think it was going to come down, at least sweep that, then go. That's what I wanted. But I knew it could react from here, from this order block here, feel the imbalance, it could go. So I took off 80% of my trade there. I took off 80% of my trade and let it be. That I brought that down to BE, so that was down to there. Then it come back, hit me BE, but I'd already taken 80%. So if you're marking your charts up correctly, you can always be one step ahead of the move that's happening. So you can always, like I said, we had this area marked out already. We had the imbalance, we had the fib. So we had this area. So when this didn't play out perfectly, it come into an area we already had marked out. So then once we had that marked out, we already had our target. If this was playing out nicely, which it did, we already had our target for it to go down into. So we had that marked out. Now, with that marked out, along the way, we don't just assume, right, it's going to hit our TP, we'll just leave it. You got to be a bit sensible. I know some people do it, they set it, they forget it, they walk away, and great. If it works, then great. For me, I think it would be a little bit silly to let it get like all the way down here and not take nothing, not bring it to B. I personally think that's a little bit silly. So at a place like that where it could react, I think it's sensible. Take 80%, take 90%, take whatever. Get some money out the markets. This is why we're sitting here all day doing it. Get some money out the markets. If it comes back, no problem. And it did. It went back. So I was happy with that. So that's it in a nutshell. That was my trade there. And I just want you to take away from this, we can always be one step ahead if we're marking out the charts. Even if, let's just say, I've said this in other breakdowns as well. Let's just say that area there was somewhere I was going to take a trade from. That was my area. It blows straight through it. You then get that box. For me, it would then be an SMT, be a smart money place where it reacts but then goes through. So it was a trap. So we change it, or we get rid of it, or we just get rid of it. We keep our charts clean. Keep it up to date. Because if you've got the relevant marks that you've got on there, confirmation, your biases, your areas, your points of interest, if you've got them marked out, you've got half a chance. And it keeps, for me, I'll be honest, for me, my memory's shot to bits. If I don't mark bits out, I'm just gonna forget. So having it marked out like that, like I know, like it hasn't come all the way back down yet. So whether it still comes down and takes that, I'm not too sure whether it's going to blow straight past it or whatever. That's the whole video. I can't be bothered to predict the whole thing, what's going to happen there. But there's a good chance. There's a good chance it still could, because we had a new high, makes more liquidity. But we won't go into all of that. But anyway, I hope this recording really helps you out to help you do your due diligence. Like I've said in other videos, you need your reasons to begin in the trade, and you need your reasons to begin out of the trade. You need to mark up your points of interest, mark up liquidity, because the charts are mainly going to always go to where liquidity is. If I'm correct with that big spike there, yeah, it was that there. Look at that lovely equal highs there. Look, lovely equal highs there. Where's my equal highs? Equal highs, and I'm sure even if we go up one more, yeah, it took that as well. So it took all of that. It took all of that, closed below, and it looks like it tapped into this imbalance here. So it's filled so much. There's always a reason behind it. There's always a reason it does what it does. I know sometimes if you've not marked it up, and I don't know all the time, sometimes it reacts and you think, whoa, what is gold doing? But then in hindsight, sometimes then you can see why it's done it. But if you're marking stuff up, you've got your areas, you normally got good targets for the gold or whatever forex you're on, for it to be going where it wants to go. Anyway, I won't keep rambling. I hope this trade breakdown really helps. It helps you keep in order. And yeah, let's have a fantastic week next week. It feels like the charts are finally coming back to normal. Pray that all the economics and the wars and all that just blows over, comes back to normal, because we are flying. We are absolutely flying. So anyway, everyone have a fantastic week, and speak to you all soon. See you then.